Good morning, people. So, this is the episode third of investments, and in this video, I'm gonna discuss about the equity. So, in the episode first, I've discussed about the need to invest and the classes of investments. In the episode 2, I have discussed about the fixed income instruments, why you need to invest in fixed income instruments, and what are the measures of fixed income instruments, and what are the classes of fixed income instruments. So, this is the episode 3 of investment. So, in this video, I will discuss about the equity. Now, before starting this video, let me be clear. Let me be clear about the topics of this video that I'm gonna discuss with you. Is that let's differentiate between two. Okay, the topics which I'm gonna include in this video are what is equity, what are the types of equity, why we need to invest in equity, because we need a solid reason to do anything. Okay, and what are the requirements if one chooses to invest in equity. Is equity for everyone? Is equity for everyone, or there is a particular age group of which you have to invest in equity? Okay, and is stock market a gamble market? क्या एक स्टॉक मार्केट जो होता है वो एक सट्टा बाजार होता है? This is the mentality that many people face. Okay, so I'm gonna also put my views on this type of poor mentality. Okay, so let's start our video. Okay, but before that, what are the topics which I am not gonna discuss with you? Well, the strategies, the market methods, and what are the basis on which you should invest in a company, and what are the fundamental analysis of a company, what are the technical analysis of a company on which you should invest, on behalf of which you should invest in a company. I'm gonna not discuss those things in this video, because if I'm gonna discuss all those things in this video, then this video becomes so large. So I'll make a different episode on those things of the market, but as of now, the only thing that I have discussed is equity, the normal things related to equity, why you need to invest, why you don't need to invest, and possible things related to this. Okay, all right, so let's start. First question is, what is equity? Well, if I talk about the general sense, if apart from the bookish language, apart from the finance language, if I talk about the general term, that equity is nothing, just a ownership. Anything that you are on, of which you are owner of, and anything that provides you return, and anything which yields you any kind of benefit, either for short period, either for long period, it can be of any period. Okay, all right. So, for example, let's say you have a pen. This is your equity. This is your asset. Because if you don't have pen, you can't write on a paper. You can't signature yourself. Okay. So that's why anything that provides you return for short period, for medium period, for long period is your equity. You have a car, that is your equity, that is your asset, because it provides you return more than a year, unless you met an accident. God take care of us. Okay, and like anything in which you are owner of, in which your stake is attached, that is equity. But now let's talk about the finance terminology. What is equity? Well, equity is just like interest in a company. Anything that arises your interest in a company is equity. Anything of which you are owner of in a company is equity. Anything for which you will receive a certain rate of return is equity. So I hope that the concept of equity is now clear. So let's move ahead. What are the types of equity? Well, there are majorly 2 to 3 types, and they are just common stock equity. I'm talking about the company's point of view. There is a common stock equity, there is a preferred stock equity, and also you can say the retained earnings of a company is also equity. The surplus that is left with the company of the last year and previous years is also equity. The treasury stock of a company is also equity. So these are the types of equity. So let's move ahead. The next question that arises is why we need to invest in equity. You are talking about the equity, you are talking about the types of equity. Earlier you have discussed about the fixed income instrument, and as now you are talking about the equity, then what are the needs that one should feel to invest in equity? This is also a major question. So before need, let me clear one thing before the topic with an example. Okay, let's say, have you heard about the thing inflation? Have you heard about the concept of inflation? Mehengai. What does inflation actually cause? It just decreases your value of money that you have with you. For example, let's say if you invested your money in fixed deposits, let's say if you invested 100 rupees in your fixed deposits, and if you are gonna receive the interest rate of 5% on your fixed deposits, and now you receive 5 rupees, 5% of 100 rupees, 5 rupees. Now at the end of the year that you are waiting for, you have invested earlier 100 rupees, and now in the end you received 105 rupees. You are so happy. I am so happy. Okay, but now let me be clear here. The inflation is also increasing every year. महंगाई भी हर साल बढ़ती है. Now the rate of inflation is 6%. Now the kind of product that you are able to purchase previous year with a worth of 100 rupees, the same product is now available to you. You can get access to that product with a worth of 106 rupees. It means that the value of your money decreases. So inflation does decreases your value of money, and this is all that inflation causes in the ecosystem, in the economy. So that's why you need to invest in equity, because the returns that you are getting from your fixed deposits are not that much through which you can fight the inflation, and everyone should be able to get the kind of return for which you can fight your inflation, buddy. Okay, so fixed deposits are not that much capable that can help you in fighting the inflation, but stock market can be able to achieve all those miracles, all those heights that you are willing to achieve in your life. So if you have to fight inflation, you need to invest in equity, you need to invest in stock market, but that requires a systematic planning. Okay, so now I think you should start feeling about the need to invest in equity. To fight inflation, we need to invest in equity, because the kind of returns that a stock market or equity generates for us is just miracle. Even just it's about more than the at least fixed deposits. You even get the returns more than the fixed deposits, so that you can fight inflation. That's why you need to invest in equity. Okay, the next question: what are the requirements to invest in equity or to invest in stock market? Well, there are just mainly normal requirements. First, you need to have a phone, you need internet, you need your PAN card, you need your Aadhaar card, you need your separate bank account that is KYC updated. Now what is KYC? KYC is just a simple formality done by the banks to know their customers. KYC just stands for know your customers. KYC, know your customers. This is just a formality, what their customer do, what business they are in, and how much money they are depositing, and things like that. So this is just the procedure of KYC. This is just the formality that is done by the banks on behalf of their customer. This is just about the KYC formality, etc, etc. Another requirement is a Demat account. What is Demat account? I think many of us heard about the Demat account, the trading account, है ना? Demat account is just nothing but an account that holds your security. There is a difference between trading and Demat account. They are not same. Trading account is one that facilitates you between buying and shares, between buying and selling of shares, okay. But demat account is something that holds your shares, that holds your security for a time. That's totally depend on you, okay. So you need a demat account, you need a bank account, you need pan card, you need your Aadhaar card, you need internet, you need a phone. That's enough? No, that's not enough. You also require knowledge, because if you don't have knowledge, then stock market will definitely turn into a gamble market for you. I'm coming to the topic. You need knowledge. If you are from finance background, you definitely used to the terms assets, liabilities, the working capital, the balance sheets, the profit and loss, the cash flow statements of the company, the audited statements, and all kind of terminologies which are directly and indirectly related to the finance term, you are aware of if you are from finance background. If you are not from finance background, then it's not about worry. It's not that you can't invest now. You can invest, because the people who are not from finance background are just doing miracles in stock market, and the people who are from finance background are not even able to cover their own capital that have invested initially. This is something that I need to change. I need to change the mentality of people, okay. So these are the requirements through which you can invest. And one thing that I want to share is that if you invested 10,000 rupees in 2008 or 2009 in the company Wipro, then you are able to receive a sum of 1200 crores right now. 1200 crore, that is 12 billion rupees in lieu of, or in return of 10,000 rupees that you have invested initially. This is the power of stock market. Now many people come and say, oh my god, what is this boy saying? This is luck. This is not luck. This is hard work. Okay, now why I'm saying this hard work? Because you are not God. You don't know which company yields you that kind of return. If you have to know about that kind of return, you need to analyze the company well. You need to analyze the performance. You need to analyze the management of the company. You need to analyze the vision of the company. You need to analyze the all kind of projects on which company is working upon. You need to analyze a lot of things, seriously a lot of things, before investing in a company. It is also possible that if you invest your 10,000 rupees in a company, in the very next month your value of money becomes zero. And this actually happens. This seriously actually happens, because those people who don't know the strategy, those people who don't know about the methods of stock market, they definitely lose their money, and it is so common. You need to accept the fact. That's why you need to focus upon the learnings. You need to focus upon the methodologies and all kind of strategies that one should need as an investor to invest in stock market, or to invest any kind of thing. You need a well prepared mind and patience level, because you need a patience. It's not that your money becomes double in 21 days. You are not giving your money to Raju भाई जो 21 दिन में पैसा डबल करके तुमको दे देगा. All right, you need to hold for a longer period. For that you need patience in your life. And this is something that you need to change your mentality about. Okay. So the next question that comes in mind is that, is the stock market a gamble market? Yes, stock market is a gamble market. Let me complete. Stock market is gamble market for illiterate peoples who don't know about market and invest their money like a flow of river, and then they blame the market that stock market is a gamble market. No, stock market is not a gamble market. Stock market is generally gamble market for those people who just invest their money without a proper knowledge, without proper analysis. We all visited doctor in our life. Have you ever seen a doctor who just look at your face and just provide you medicine? Absolutely no. He will check your nerves, he will check your internal system, right? He will do certain checkups, he will write certain checkups, and on the analysis of that, on the analysis, on the basis of report, he will provide you medicine now. So become that doctor before investing in stock market. Like many people think that, oh my god, Reliance Reliance is a brilliant company, just invest 1 lakh rupees in this. And what if Reliance not able to perform well in the next quarter or even the next year? You lose your money. That's why it doesn't matter what kind of a company you are thinking about to invest in. You need to have your research with you, you need to have your analysis with you, because if you can able to conduct analysis before investing, then you are definitely not gonna lose your money. It's sure, 110% sure. Okay, so stock market is not a gamble market, sir. What is gambling? Anything in which you put your money and you just close your eyes and you just worship your Ishta Devta, that oh my god, just save my money, I have invested. This is gambling. In gambling is something about for which the results of which you are not aware about. Gambling is that thing whose results you don't know. That is gambling. But stock market is not gambling. Stock market is a gamble for all those who don't know the method, who don't know the strategy, who don't know their risk appetite, who don't know how to invest in a systematic manner. Stock market is a risk for those people, and definitely they should not put their leg in the stock market if they don't know about the strategies and methods, because instead of yielding you return, stock market will eat your money. Stock market is basically for those people who are able to hold their investments for a long period, if they are investor of a long period, and if they have systematic knowledge, if they are able to categorize their risk appetite, and if they are able to conduct a well behaved research before investing. Stock market definitely yields return to these kind of peoples. So for that you need to be well educated about the markets. That's why knowledge is something that you need to achieve before investing. Experience is also something. Experience also do form part of the market, but knowledge is also do form part. Knowledge also do form part of the market. Okay. So stock market is not a gamble market. Why I personally recommend to invest in equity, why I personally recommend to invest in stock market is simple. If you are in your early 20s, if you are a person between age of 20 to 24, even if you are in your mid 20s, in your late 20s, in your early 30s, you should definitely invest in stock market, because we as a youth require funds to pursue our dream. Our parents can only funds us up to a certain sort. They can only take our back up to a certain sort, and after that we have to take care of ourselves, we have to take care of our future, and for that everyone require funds. So from where you get those funds? Definitely you need to do something. Either you can do job, either you can do your business. Now business is not everyone cup of tea. Okay, business is also a stock market, if you understand well what I'm saying. Okay, so you need to invest rather than saving your money. Maintain an emergency fund in your bank account, but invest your money more than that. Then only you can fight your inflation, then only you can able to pursue your dreams in a better manner that you can ever be. So this is something that you need to change your mentality. Even if you are in your early 20s, you need to invest, because we need funds. Everyone need funds, but youth require more funds than general people, because it's just starting of their career. It's just starting that it's just a stage where they are able to pursue their dreams, and for that they require funds. So for that they require funds. Okay, now the great investor Warren Buffett sir says the investment should be between the ratio 70, 20 and 10. Now what does that mean? It simply means that if you are a youth and if you are planning to invest 10,000 rupees at the end of every month in stock market, in equity of any kind, the 70% of 10,000, which basically means 7,000 rupees, should do form part of equity investments. You should invest your 7,000 out of 10,000 in stock markets. Next 20%, it means that next 20% you should definitely invest in fixed income instruments, not in FD, in bonds. Go for bonds, not in FD. FD eat your money, it just save your money, it doesn't grow your money, it just saves your money. Okay, and the remaining 10% proportion should do form part of commodities like gold. You can purchase digital gold, that's why. And if you are a person of old age, even if you are in your early 50s, in your early 40s, then you should, ratio should be same, 70 20 and 10. But the priority changed, the priorities are now changed. 70% of your money now should do form part of fixed income instrument, because as a old person you don't require that kind of fund, though that kind of funds, because you have lived your life. What you will do of money now? Okay, so 70% should do form part of fixed income instruments, 20% in fixed sorry 20% in equity, that is basically stock market, and 10% in your digital gold and commodities like that, exchange traded fund, ETF and all that. Because you are not having that kind of risk that a youth has in his or her life. Youth suffer more risk, sir. That's why the proportion of investing in stock market is more in the life of a youth. So this is the principle that I have followed of Warren Buffett. My portfolio is about like 65% of my money I invest in stock market. 65% of my amount that I am investing right now goes to my equity, and then remaining portion in some in crypto, some in gold, some in fixed income instrument, mutual funds. Okay, so this is all about equity. So in the next video I will discuss about the real estate, properties, business and all. So this video is just about equity, and the methods that you should follow before investing in stock market, the kind of strategies that you should follow, the kind of risk appetite that you should able to calculate on your own behalf about you. I will discuss in next video that what you should see in a company before investing, how to read the financial of company, how to see the vision of company, how to check the management of company. I will discuss each and everything in detail for sure. This video is just about and short intro to equity, the need, the types, the requirements, and stock market is not a gamble market. Okay, sir. So we'll meet in the next video. Thanks for today. Thanks to God for today. And you should definitely invest in equity if you are a youth. Thank you.